So this US 30 analysis for Monday the 5th of February. Now, let's have a look what have prices and where prices may likely go. So we saw a pretty big sell-off on the second. So I did mention from the previous video that we could potentially have an inverted head and shoulders if we were to hold the 2686 level. So shoulder would have been over here, head would have been there, and especially after we had this pullback from our highs in around this 26,700. Now, it didn't play out. The head and shoulders was invalidated by due to the fact that we had this candle here with the black arrow above it that did close beneath this 2686, thus invalidating the inverted head and shoulders. What we did see is this primary trend here, our most recent trend to the downside, continue. And we saw this pretty strong sell-off from that 2686, or bringing us all the way down to this 25, where was the candle? Right around here, 25,243. So we've had price come all the way down to this 25,243, this minor level here. Oh my word, what have I done? There we are. Lock my drawings in. So what we did see was prices head all the way down here into towards that 25,243. Is a minor level marked out here in blue, previously identified, as can be seen by the previous US 30 videos. And as we can see, we've come down and we do have a bit of a bounce at the moment. So we'll see if this is merely a pullback or a retracement or potentially a reversal. This strong sell-off may not reversal because markets tend to fall down. The saying goes markets fall down, elevate, rise on the stairs and rise on the stairs. But when markets do fall, they fall down an elevator shaft. So this is a classic elevator shaft, whereas we've got strong sell market. So we'll see whether we do retrace all the way back up. So if we say this retracement that we are seeing at the moment, and we were to use it and look for potential areas where we might see further sell side momentum come back into the market, we're looking for price head up towards this 25,439. Up at 25,439, again, we might see that sell side momentum taking us all the way back down to this 25,243. A break from this 25,439, we're looking to see our prices reacting around 25,600, 25,660, beyond which we're looking to see our prices react towards 25,708, and before that, 25,879. Depending on market volatility, I won't anticipate price moving beyond 25,879. If however we do see the retracement and we do see further sell side momentum into this market, so if we return to this 25,439 and see that sell side momentum, or we turn around before we get up there, we are looking for price head down towards our 25,101 before looking for that 25,000 mark to see how prices will react in around 25,000 mark. I wouldn't anticipate prices moving much beyond the 25,000, but if we do see the volatility as we have from Friday, we have to look for potential targets. So let's see, we're at 25,000. If we look for 800 points or so, we're looking at 24,000. Here we are. So if we do see that sell side momentum come back into the market, and we do see strong sell side momentum, again, we're looking to see prices go down to 25,000, a break from which we're looking for 25,864, and beyond that, we're looking for 24,700 on the US 30. Now, 24,700 on US 30. Now, I think that pretty much wraps up everything on the hourly time frame. So we'll look at the higher time frames. It won't tell us much, but we'll have a look at the higher time frames, see how prices are developing. So we'll start with the monthly. So on the monthly, whoa. I was a bit surprised there. So on this monthly chart, wow. So on this monthly chart, if you've watched my previous video, is a pretty long video. I was saying that this candle with this indicator, I've got the MCs underneath, all the candles with the MC underneath. The indicator basically indicates each candle, which is over 1200 pips. And what I did say in the previous video, I'll just say it quickly in this one. Anytime we've had 100 pips, we usually see prices reverse of that candle. And on the when I previously did some testing on this, I used 1,000 points, and there was an occasion where that did not work out, and it was on this candle here from 2008 where we did have that 1,000 points open to close, but we did see further sell side momentum coming to the market, thus invalidating it. But as you can see on these occasions over here, when we do have a 1,000-point move, we do tend to see prices trade either beneath the low if it's a bullish candle or above the high if it's a bearish candle. Now, further adding to the likelihood of this happening here on the US 30 is the fact that we've had a very strong uptrend. Then we've had this candle which is over 1,000 points. And further, so it would be indicative of an exhaustion candle, as we've had a strong trend. Then we have a very large candle in that trend. Usually indicates a reversal in that trend. It is an exhaustive move, one last push by the bulls before they capitulate, and bears see the opportunity and re-enter the market after seeing an exhaustive move by the bulls. So one large push in a trend, very large push at the end before prices retrace or reverse, and that's pretty much what we're seeing now. So we are seeing that sell side momentum. The target that we are looking at is all the way down at 24,711, which is the low of the previous candle of January. So, well, the open or the low, whichever you like. But the low of the candle from January, our candle which is over 1,000 points. So we are expecting prices to go down to its lows from where we are at present, rather than head up to, say, the 27,000 mark. Now, let's just have a look at the other time frame. So if we head over to the weekly, and over to the weekly time frame again, we're in a very strong uptrend here. As indicated, we've not tested the 200 period moving average, the 20 period moving average in some time. Posted this very strong bearish weekly candle, very strong, somewhat engulfing, and it's larger than the previous 5 or so candles in this uptrend. So we did see quite a bit of sell side momentum, and we do appear to look poised for further downside momentum here on the US 30. Now, on this weekly time frame, I wouldn't anticipate prices retracing all the way back there, but our target on the monthly is 24,711. On this weekly time frame, if we were to pull back to, say, the 20 period moving average, which I suppose it wouldn't be too unusual, I'd suppose. And we are looking for the 20 period moving average, currently sitting at the 24,287. So 24,300. That's still another 1,000 points or so from where we are at present. But again, that's only if we do have a kind of mean reversion and we do have a retracement back down to the 20 period moving average. Less confident in a move to the 20 period moving average than I am for a move towards the 24,711 due to the exhaustion candle on the monthly time frame on the US 30. Now, if we head over to the daily chart, and we head over to the daily and just see how prices are developing, again, we are seeing that a very strong move to the upside, very strong move, brief pullbacks down towards the dynamic levels of support of the 20 period moving average. And as we can see here, we've had a very strong break of the 20 period moving average. We are heading down towards a 50 break, from which we're looking for prices to head down towards an area that we've previously had consolidation in around the 23,500 mark. Although don't expect prices to head all the way down there, it's important to be aware of these levels. So we've got 23,500 on the US 30. Let's see where our drawings are. There we are. And yeah, with that said, that pretty much wraps up the US 30 analysis. Thanks for watching.